Good afternoon, fellow traders. Welcome to another webinar in the Blue Sky Forex webinar series. Today's topic will be trading the news effectively. So essentially, we'll be touching the surface of what it means to trade the news, what you need to keep your eyes out for, and what to take into consideration. So before we continue any further, can you just confirm in the question section whether you can properly hear me and see the presentation screen as well, please? Okay, perfect. Thank you very much for the confirmation. Sorry for the small delay in starting up the webinar. I had to adjust a few technical things here. Great. So before we completely kick this webinar off, let me just quickly go through the disclaimer and then we can move on. Contents of this material are provided by third party, not hot forex, not for informational purposes only, and do not constitute investment advice. Hot forex and blue sky forex assume no responsibility for any potential errors, inaccuracies, or omissions in this material. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose of purchase or sale of any financial instrument. Any views or opinions presented within this material are solely those of the author and do not necessarily represent those of hot forex unless otherwise specifically stated. Currency trading may not be suitable for all investors as it carries a high degree of risk to your capital. Trading such products is risky and you may lose all of your investment. Past performance is not indicative of future results. Poor fill rates, expiry times, market volatility, and platform errors could result in losing trades. Before deciding to invest in currencies, you should carefully consider your investment objectives, level of experience, and risk appetite. You should be aware of all the risks associated with foreign exchange and currency trading and seek advice from an independent financial advisor if necessary. So with this out of the way, let's just check the brief agenda that we have for today. I'll introduce myself. I will then take a look at two market types you'll come across during your daily trading activities. How to trade the news effectively. There will be 4 general things that you should consider. And then, of course, some dangers that will come along with trading the news. And of course, at the very end, you can ask your questions. So please, if you have a question popping into your mind, just write it down somewhere and ask it away at the right time, okay? So I am one of the senior traders here in Blue Sky Forex. Blue Sky Forex is an educational research and trading group. We provide 24-hour trade support and analysis just to help retail traders make better trading decisions. And of course, we all here have our own different styles and approaches, strategies that we prefer and like most. Some of us are technical, some of us are completely fundamental, so it's a good composition. So the 2 market types you will come across. Let's just go through this quickly. Most of you already know this, especially the ones who have been on this webinar series before. So first of all, we have the price action, aka a trending market. This is certainly more powerful. You have heard the expression "trend is your friend," which is completely true. At all possibilities, you might want to ride with the trend with your trades, just to maximize the potential profits. Identifying a properly trending market, of course, is a bit more difficult than the next market type. And the reason behind this is that you must have some fundamental understanding of what events, what news can actually make a certain asset price properly trend in a certain direction significantly enough for you to properly benefit from it. Okay, so identifying a properly trending market is a bit more difficult. And then we have the mean reversion, aka a ranging market, which is certainly more common. It's easier to identify, and of course also can be profitable depending on what approach you take towards trading. And during the mean reversion market, you will see the price essentially bouncing between the nearest support and resistance level. Okay. Now, trading the news and to be effective in it, you certainly need to be able to identify and spot a proper price action market and being able to determine when a mean reverting market switches to a trending one. Okay, so that's really key to trading along with the news. And of course, attempting to accurately estimate how long the trend will last is also a big plus, because then you will know how long you can ride with the trend. That makes sense, right? So it's really straightforward. So if you want to try to trade the news, you need to plan ahead. So that's the main thing. You need to think ahead a bit, because you can't really trade news on the fly. Okay. So here are the 4 points that you certainly need to take into account and consider when trying to trade the news. Again, the first is pre-planning. The second point is that to understand which news events you really want to trade. And then understanding the chart patterns that will indicate, or that will actually provide you with the opportunity to trade the news. There are a few things you can actually yourself check on the chart that will create this appropriate environment for you to trade the news. And we'll talk also about trade calibration. So let's get right into this. So pre-planning the news day. Now, the calendars of the important events and also less important events are planned ahead for at least a month. They are all put into a calendar for you to see. Okay. Now, the variation of news events that are displayed in a certain calendar that are observing, I mean, that depends on the calendar that you are observing, right? Different calendars may leave some news events out and may include some others that you don't see on different calendars. So you need to, first of all, select the calendar that you feel most comfortable to visually analyze and read. I would suggest to seek for a calendar that also has descriptions of the news events. Now, these descriptions, they give you a good insight of what that event is all about. Okay, and understanding what the event is all about will also help you determine the significance of it and the potential to move a certain or underlying asset price significantly. Okay, so that is really important. You cannot trade the news on the fly. So let me give you an example. If you know that you're going to start your usual trading session at 1 p.m. the same day, if you jump in, if you open up your tools exactly at 1 p.m. and you see it that at 1 p.m. you also had a significant or potentially significant news release hitting the market, You have the numbers that are displayed along with the news event. That already depends on the news event, of course, like interest rate decisions, etc. And you immediately see some market movement happening, and you immediately enter the trade. Expect this to go up because the numbers potentially indicate that it actually will go up, right? Now, I would say this is gambling. If you don't properly analyze the news, if you don't properly analyze the numbers, if you don't really let the market digest the numbers first, and then determine what would be your preferred trade direction based on how the market behaves, then it's gambling. You cannot just trade news on the fly. You need to plan ahead. You need to understand the news that you're trading. You need to prepare specifically for that certain news that you aim to trade. Okay, you have to be ready earlier. You need to analyze the market, how it has behaved earlier. You need to determine the support resistance levels that are nearby, because support resistance levels always play a really, really important role in the market movements. Okay, it has happened before that there is an extremely significant news released, which makes the underlying asset move significantly, right? However, there is a resistance level nearby, and as soon as the price hits that resistance level, it bounces right back down and goes in the other direction. Okay, because if you didn't, most likely you didn't analyze the resistance properly, and it was extremely significant resistance level there. And from the past, there had been still open pending orders that got triggered and moved the price in the other direction instead. So these resistance and support levels, they have prevented significant potential price movements before in the past as well, and they will continue to do so in the future. So no matter what type of trader you are, no matter what strategy you're using, no matter your trading habits, no matter your trading styles, support resistance levels are always something that you need to incorporate to your trading decisions. Okay, you need to be able to analyze them, you need to be able to determine them and then draw them on the chart yourself for easier visual analysis. Okay, so support resistance levels definitely incorporate to your trading. So you can't trade news on the fly. News calendar is planned ahead a month in advance at least. So you have the whole beginning of the month to actually plan ahead when you want to trade what news. Okay, I mean when you need to be online to aim to trade that certain news. Now, I would say that it would make sense to be ready to trade a certain economic event about an hour before it actually releases. Maybe even more, depending on how detailed you want to be with your price chart analysis prior to the news release. Okay. Some people do tend to go into extreme depths, drawing all kinds of trend lines, different harmonic patterns, using different indicators, overbought, oversold indicators, zooming out, zooming in to see exactly what the market is doing at the moment and on a larger scale, etc. So these people who are performing these extreme detailed analysis of the chart prior to the news event, these people all obviously need more time to put into the chart analysis, right? But I would say, 1 hour should be enough for you to understand what's going on in the market with that underlying asset that a news event potentially will affect. So definitely be ready. Okay. The next thing is what news events should you aim to trade? Now we'll get into that in a moment, but generally speaking, you can aim to trade only the news events that are marked with high importance. Depending, of course, on the news calendar, different news calendars mark different significant news down differently. Some of them use a 5-star system, some of them use a 10-star system, some of them just write whether it's a low, medium, or high impact news. Now, for example, if a certain calendar is using a 5-ball or 5-star system, then I would consider high impact news the ones that are obviously the ones that have 5 out of 5 balls, or depending on the news, some of them you can also trade when they have 4 out of 5 stars or balls, right? And only the news that are marked as high significance and high impact news. If you're dealing with a calendar that classifies their news significance with low, medium, and high parameters, okay? Some of them just have colors, right? Red usually means it's a high impact news, yellow is medium, and green is low impact news. So yeah, different calendars show the importance of the news differently. So please choose the one that feels best for you or most comfortable for you to visually analyze, right? This is really important because that will help you quickly absorb the news calendar and just determine exactly what you want to do for that next month, for example. Okay. So prioritizing what to trade. So this is essentially what news events you might want to focus on or prefer over the others. Okay. So on the top of the list, we have interest rate decisions, many by central banks that are significant, right? These news usually make the underlying asset move considerably for you to benefit from. Then we have the GDP and CPI releases, gross domestic product and consumer price index. Now these two parameters essentially, broadly speaking, indicate a certain economic's health or well-being, right? So these indexes, these parameters also, and quite often have a considerable impact on the underlying asset of that region, okay? Then we have the job data. Most of you have maybe already tapped into trying to trade the news. I'm quite sure you have come across non-farm payrolls in US. This is quite often the news event that makes the underlying asset move considerably. Then of course we have a bit more difficult parliament votes and of course consumer confidence data at the end. So these 6 events that you can find in the calendar are something that you might want to prioritize. But obviously there are other events that will be marked down with high importance or high impact into different calendars. So you just can go ahead and practice and test out which events you actually like the most. I mean, this is where experience will help you out. Just testing it out, trying to trade different news events, seeing which ones you have most success with, and perhaps stick with those and only trade those certain events or simply prioritize those events. If you have many different high impact news during a single trading day or session, then you already know which ones you want to prioritize, and making one single trade per trading session, if you are a news trader, is completely fine. Okay. Okay. So let's take a look at the chart now. And this is a really common candlestick chart pattern that forms prior and during the news and after news, right? So let's take a look into this in a bit more detail. Just ignore the actual chart time frame, 10 minutes here. It's not that significant. We're simply here to check how the candles are forming and what actually causes this type of movement and this formation. Okay. The first thing you would want to do is draw Bollinger Bands onto the chart. Add it as an indicator. Okay. Bollinger Bands are something that will certainly help you identify this formation. Okay. So the next thing you'll start analyzing here are the actual candlesticks themselves. Now, it doesn't matter too much at the moment on this example what happened here on the really left side. What we are interested about is what happens here in the center. Okay, so here you have a hectic movement, you have large wicks with small bodies, then you have a significant drop in the price based on the previous movement, a quick drop, and then you see the price starts consolidating to a narrow range, right? So the volatility calms down, the price consolidates, and you don't see so much movement on the market anymore, especially on that single certain asset that you're observing, right? The underlying asset. And then you start seeing significant price movements again, and what happens is a Bollinger breakout. So this is the formation, the name of the formation, we call it the Bollinger breakout, okay? So let me explain the reason behind this movement. You see the price consolidation happening prior to the news release. And this is because a lot of traders are simply staying out of the market to wait until the news event hits, to know the numbers, to know what was the result of that event. And then they start making their trades again, because then they have some data to rely on. And whether they will wait just a little bit for the market, for everybody else to digest the numbers, see who wins, the bulls or the bears, and then they will place their trades and just ride along with the trend. Okay. So the market or the price movements of the underlying asset, they calm down, they consolidate into a narrow range prior to the news because a lot of traders are sitting out. And when the news release hits, it usually starts more hectic than this. You know, it quite often is really volatile, going up and down. You have candles with really large wicks, depending on which time frame you analyze, of course. And then you have a certain trend forming that you can also trade along with. The reason why we added Bollinger Bands here is that these help you find and observe the formation. So during this price consolidation, you see that this quick drop here, it caused the Bollinger Bands to diverge, right? So they are going in the opposite direction. The channel goes a lot wider. Okay, so you see the upper band and the lower band going wider apart. Okay, this is due to this quick drop here. And during the consolidation, you see the bonds coming back together into a narrow range here. Okay, so they start coming back together due to this consolidation. And really often, just prior to the news, the Bollinger Bands also gather up, they converge into this narrow range, right, like the price. So at this moment, the Bollinger Bands are quite narrow. So your trade entry should be when the first candle closes outside of the Bollinger Bands, okay? So here at the arrows, we have the news release actually hitting the market. We have one larger green candle, then we have a green candle with a wick. That's probably some sell orders were triggered here as well during the consolidation, the ones that were placed during the consolidation. And here is, this is closing almost outside the bands, nearly at the very top band itself. If you look really closely, it's not really getting there. But this next candle here, if you can see, is closing clearly outside of the bands. So if you want to be on the safe side, you can initiate a long trade here and then just ride along with the trend. Okay. So again, you have price consolidation, price coming into a narrow range, Bollinger Bands as well come down into a narrow range. Then you have the news release. You see the price starting to move again. You maybe see large candles, and the Bollinger Bands also start to diverge again. Okay, and the first candle that closes outside of the bands, you trade along with the direction where the candle closed outside of the band, because that would be then the generally forming trend, the next one. Okay, it is relatively simple and easy, really straightforward. The chart time frame that you want to use, it really depends on your trade style. If you want to be a longer term trader, then obviously you would only be trading those most significant news events anyways, right? And then you can trade maybe a bit on a higher time frame, maybe a 1 hour chart. If you are a scalper, for example, or if you want to initiate a bit more trades more frequently, then obviously you would be zooming into lower chart time frames. Okay, like a 10-minute chart or a 15-minute chart, for example. It's really up to you. This example is brought on the 10-minute chart, just for your information. Okay, let me just check and see if everything seems to be all right with the tech. The audio is coming through, visuals are coming through, everything seems to be fine. You don't mind me checking up on this, because I have done webinars before where half the webinar something happens, and then the other part, I'm just talking to myself. Okay, so that's the reason why I'm checking from time to time, just to be on the safe side, right? Okay, so this is the chart formation that you will often see during the news event. So let's talk about chart calibration. When to enter the trade? Based on the price, based on a chart formation that I showed before, the breakout formation, you would enter the trade as soon as the very first candle closes outside of the bonds. Okay. Now, something to keep in mind, that during the first 15 minutes after the news release, you might witness quite significant volatility. Okay, so the asset is really not moving in either direction. It is just going up and down, really volatile. So this is really not the best time to enter the trade, because we are still unsure who will win, whether it is the bulls, whether it's the bears. So I'm not really sure in which direction the market will go. And often it happens that even if you're dealing with bullish numbers, the asset can still start falling slightly. Okay, because it's really ultimately down to the traders, because they are moving the market, not the numbers, not the news release numbers that are visible in the calendar. They don't move the market, the traders are. And if the traders decide that they want to go short, even if the numbers were bullish, then the price will go down. Okay. So within the first 15 minutes, usually this is determined, and most likely you will still see the price moving in the direction or the logical direction based on the news release, but sometimes you might witness the opposite. Okay, so like with any strategy, it will work maybe most of the time or some of the time, and the other time, the other part, the other half of the quarter doesn't matter. It will not work because the market conditions don't match the strategy. Okay, compatible. The strategy doesn't really work on that other type of market, other conditions. Market conditions change intraday as well. Okay, depending on what session is open at that moment, whether we're having a London market open and US closed, for example, or we have the London US market overlap where most of the daily trading volume happens, or we're just dealing with a late US session where it is really calm and a bit more quieter than earlier during the day. Okay, so something for you to definitely keep in mind. Now, if you're trading the news, when should you exit the trade? Now, this already boils down to really the trader's personal preference and habits. You can get out of the trade even after 30 minutes if you have reached your target. If the asset movement was so sharp and you predicted correctly, you can really easily hit your take profit quite quickly. And then in some cases, if the price really sharply moves in your predicted direction or either direction, right? It might trigger a lot of opposite orders in a short period of time. So it will spike here and it will spike there, right? So you can see this kind of hectic movement from time to time. And you can potentially initiate really short term trades as well, and then do hit your targets even for the session. In some cases, you will see the price being more consistent, having a more stable movement in one direction. So in this case, you might want to stay in the trade for a longer duration, right? Maybe few hours. Maybe you want to leave it open overnight. But if you are already going to such extent to leaving the trade open overnight, then you have to have justification for it. You have to have something else that is also backing up the trade, not just one single news event. Something else like an extremely good macroeconomic conditions in that certain country. Okay. Maybe some big company that has a really significant impact on the country's economic situation, and that company is doing extremely good. Maybe that company also released really good news, and you have let's say some really good news coming from the central bank of that country as well. So we have two factors already you can take into consideration to actually justify your trade. Okay, in this case, you can leave the trade open for longer durations and ride with the trend. Maybe the trend will take you to your target by the very end, right? I personally prefer this kind of a bit slower and more stable movements than hectic, quick in and out trades. Okay, that is in the reference of news trading. Okay, and also something to keep in mind that I mentioned before: definitely use Bollinger Bands. Bollinger Bands are one of the most useful technical indicators that we use here in our team. There are also a lot of, sort of say, strategies that people share that also incorporate Bollinger Bands into them. Ultimately, you have to understand that all technical indicators are just showing the same thing, but in a different visual way, right? They're ultimately still derived from the actual price movements, most of them. Okay, so, but yeah, Bollinger Bands are the ones that we feel it's the easiest to visually analyze and understand and read. Okay. Okay, so let's talk about a few dangers when it comes to news trading. Some of these points are not really directly news related, they are more generic, but we still incorporated these into here because we know that these points are important and you should be really, really mindful of them as well. Okay, so first and foremost, please try to refrain from using any automated systems that place trades on behalf of you. Most of them are designed to generate losses on your trading account, so please be extremely careful. If you want to try out any trading bot, then please do so on a demo account. And if you witness that certain automated system raising your account balance consistently without large drawdowns for a longer duration of time, let's say 6 and plus months, then go ahead and set it up for a live account, or just consider it setting it up on a live account. And if you do set it up on a live account, please use really low lot sizes, because we are always all in for trading safely. And we always recommend users to trade as safely as possible, okay? Because when you're trading as safe as possible, then you will be able to remain in the game, in the industry, just to continue trading for a longer duration of time. And the longer you trade, the more experience you gain. And the more experience you gain, the higher chances you have to being a successful trader longer term and consistently. Okay? So keep that in mind. The next thing that is directly news related is that, and of course it has happened before, so please be mindful. The news events that are numbers based, and then quite many of them are, may be followed by conferences where different critical and really significant statements can be made about that certain event, maybe comments or comebacks, whatnot. And these critical statements can sway the price asset movements in the opposite direction. Okay. So let me give you a really blunt example, right? Okay, this is fictional, but it will get the idea through, right? Let's say you have non-farm payrolls numbers released, and then the prediction or the previous data point showed 200,000 unemployed. Okay, then the analysis, the news release actually shows the same number, that there are 200,000 unemployed. So that wouldn't, this is already expected, right? This wouldn't perhaps make the market move so much. And then we have a conference, and some policymakers and central bank or some big businessman comes along and says, no problem, I will hire those 200,000 unemployed people. Okay. But this will create an extremely positive vibe, and the moment the information gets out, it will certainly cause the market to move a lot, right? This is an extremely strong statement, and if it actually really happens and it's backed up, then it will definitely make the market move. So these kind of statements, the words from important people, have a really high impact on the underlying assets. Okay, so that is definitely something that you certainly need to keep in mind. It works the same for not only FX, it works the same for stocks, right? So if the leader of a company says something stupid, it might damage the company reputation, and it might lower the value of the company in terms of stocks. Okay, so that happens. It has happened before, and it will happen in the future. Now, the next thing I want to bring out here is when you are trading majors, or even when trading any asset, to be honest, right? It doesn't only apply to majors. What you have to think about is conflicting data sets, which means that, let's say, if you have a positive news that affects euro positively, okay, and you are already ready to go long euro USD, right? One second. Okay, sorry for the small hold up. Okay, so let's say you have positive news affecting euro. You're ready to go long euro USD, and then at the same time you have really positive news affecting the USD. Okay, then you might see the price of euro USD not really going to trend in either direction. It's going to start ranging because there are two news events and two data sets that actually are conflicting each other in a way of the euro USD, right? Both news events affect both assets positively. So this can only mean that the price of that certain asset, as a pair, so to say, will start ranging instead, not trending in either direction. Okay, so need to be aware of other news events also released at that same time. So you don't only have to focus on the event that you want to trade, you have to be aware of other events also released during the same trading day. Okay? And the last point here to bring out is sometimes it is quite rare nowadays, but it has happened before, so we thought that it's still worth bringing this up. Sometimes the numbers that are released to the public regarding that certain event, like on payrolls, for example, right? The numbers are too good to be true or too bad to make sense, okay? So in this scenario, it can happen that some mistakes were made when the data was submitted, or there was some miscommunication or confusion, and these data sets are then properly adjusted to reflect the factual data and then the actual data that makes sense. Okay, so the initial data might have caused ripples on the underlying asset pair, but then the actual numbers are released that truly make sense and that are actually correct. And this data set can cause the opposite price movement to take place. So if you witness some numbers to be too good to be true or too bad to make sense, then there might be some adjustments taking place shortly after. So in this scenario, it's better to perhaps seek this one out. Okay. On this webinar, the material, that's done. But there's one more thing that I want to mention here. I don't say it on every webinar that I do, but occasionally, it comes back, it pops into my mind, and I always feel it's really worth telling you that you do not have to trade alone. Okay, trading alone, for some people it might be beneficial because they can do their own thing and they can only focus on what they're doing, and these people usually think that they are more adequate to analyze themselves than others. Okay, but that's not really always the case. Trust me on this one. It is beneficial for your trading career to absorb information and critical feedback from other traders as well. Okay, so do not trade alone. Don't force yourself to trade alone. Don't force yourself to be independent completely in terms of personal involvement. Do engage in different trading communities. Share your own trading habits, your trading journal, your session statistics, your upcoming potential trades that you would want to make, and share this with the community and then see if you can get some good feedback. And a lot of traders, they do understand that you are on the same side and it's always worth helping each other out. So they will be able to provide you with some critical feedback that they might witness and they might find, but you cannot, right? You can't really look at yourself from that perspective, and you might miss that critical fact or might miss that mistake that you're doing. And they will be able to spot it, and they can provide this critical feedback, and you just endorse it. Don't retaliate when somebody says that, hey, you're trading too much, you're spending too much time on trading per day, that's not really good for your technical analysis capabilities, for example. Don't take this as an insult, take this as constructive feedback, okay? This kind of critical and constructive feedback definitely will help you become better, okay? You don't have to completely, change your attitude towards trading or change your mentality or trade habits or your strategy based on one single other trader's feedback, right? That's not the case. That's not what I'm saying. I'm saying that you should absorb the information that you get from outside, analyze it, and then see if it actually makes sense. And then you can build your own strategy upon others' feedback as well, right? That's not a crime. That's something you actually should do. Engage in different trading communities, get their feedback, share your own experience, and then read others' experience, what they have done in the past, what are their mistakes that they have done, and then just don't make those mistakes, for example. There's a lot you can learn from others. So again, don't trade alone, okay? It's not so difficult. It won't take too much time out of your trading related activities. Okay, but this is it for today's webinar. I hope it was informative. I hope I was able to provide you with some useful information that will help you scratch the surface of news trading. It is a fascinating topic, and it also can be really intimidating when you first approach the news trading, because you can really witness the asset prices jumping around like crazy, and then you see those large movements, and then you can just think that how how am I even going to get into that if it's so hectic there, right? Well, I hope that these a few bits of information will help you through that initial, I'm saying, initial scare. Okay, I will open up the question section now, and let's see if I can get some questions rolling in just one moment. Okay, Maiha is asking, is there any way we should trade before the news? If I understand the question correctly. Okay, so you're asking if you should think about entering the trade prior to the news. Okay, this is called pre-positioning. Okay, if you are an advanced and expert macroeconomic analyst and you understand how this all works and you have traded news before and you have that experience, you have that capability to properly predict or adequately predict the potential price movement before the news event has actually released the numbers, then fine, you can go ahead and pre-position yourself. But if you're just starting out, then using the Bollinger breakout method that I showed you on the price chart as well is good enough. It's a bit of a technical approach. It's a bit more of a technical approach along with, of course, a fundamental analysis that you have to do anyways. That would be the easiest way how to engage the news trading in the beginning, I would say. Pre-positioning is already a bit of an advanced technique, and is usually done by the bigger players. Okay, Peter is asking, please, how do you determine the actual direction of the trend? Because sometimes after a particular direction has formed, after 30 minutes of the news, like on 1 hour chart, for example, the next candle just forms in the opposite direction of the previous candle. Okay. I understand your question. One thing I want to say that you can never say with 100% accuracy that something will happen, unless you are a person from the future and then you know how to go back and forth in time. Okay, I sincerely believe that's not the case. So you can't really say for sure that this Bollinger Band breakout formation will also be 100% accurate at all times, and then you won't have any retracements or you won't have any pullbacks during that news event. Okay. Now the strength of the price movements, they also depend on news and the actual numbers that are released. If the previous numbers were low, the predicted numbers are also the same, but the actual number is way off what was previously and what was predicted, then it will cause a lot more volatility in the underlying asset, and it has higher chances of creating a proper trend that has only minor pullbacks, not complete, let's say 70% retracements, if you know what I mean. So what I'm trying to say is that you can never be sure. Even larger news can have significant retracements and pullbacks. But the stronger the news, the stronger or the higher the possibility of more significant trending movement without significant pullbacks. Okay. So in this sense, if you witness a strong news event and you already see a proper trend forming for 30 minutes into the news, for example, and then for the next 15 minutes you see the price actually retracing or pulling back that 30-minute move, then you can actually utilize it to your benefit. Okay, and here we are then relying on what we call the channel surfer theory, essentially, which relies on the Elliott wave theory, where you have the impulse waves and the corrective waves, and simply wait until the retracement ends or small brief pullback ends, and then, you know, if you see the price starting to go in the direction of the trend again, then enter the trade, and then you will have much better price than you would have done before, after specifically 30 minutes into the trade where the trend had been forming consistently, right? When it pulls back, you get a lot, depends on the movement, of course, you get a better entry price, right? So just utilize it to your own benefit. Samuel is asking, is it always advisable to trade the news? It's a good question, a bit the cheeky one as well, because you can't say that it's always worth doing anything. It's not always worth doing something. You can't say that it's always worth trading the news. It's not always worth trading the news. It's worth looking into trading certain news that you feel are significant enough. Okay, so let's put it like that. It's not always worth trading the news. It depends on a lot of things, whether you should trade the news or whether you should not trade the news. Okay, Ayab is saying the most interesting news trading education I've ever had. Thank you very much for the feedback. I really appreciate this. And also ask, should we trade Brexit as fundamental economical issue or a political issue? Okay, it's an interesting question. Whether you treat this as an economical issue or a political issue, I would say that differentiating these or categorizing them differently let's put it like this. If you personally would trade political issues in one way and you would trade economical issues a different way, then of course it would make a difference for you personally, right? But more generally, it wouldn't matter too much if you trade this as an economical issue or political issue, because different economic issues cause different effects on the underlying asset, and different political issues again have different effects on the underlying asset. So you can treat these equally, But if you personally treat these separately and apply different approaches to the two different issues, then it is already up to you. And you can, for Brexit specifically, you can treat this either way, because it is both, right? Because it is a political issue, and at the same time, it's an economical issue, okay? I hope that I was able to answer your question. Okay, what is your advice on setting pending orders for sell and buy? I'm guessing during news events, right? Because we're talking about news trading. Okay, it's a good question, but pending orders is a completely separate topic on its own that can be talked about in more detail. But when it comes to news trading, it really depends on your personal preference. I personally prefer trading news actively without pending orders and just completely analyzing the price itself, what it is doing at that very moment, and be ready to enter the trade as soon as I feel ready, okay? If you feel more comfortable analyzing the price as it runs, and then setting pending orders and then actively adjusting them, and just then witnessing later on when you have the price fluctuations and when you hit that level, your trade will be initiated, then feel free to do so like this. You can do it either way. It depends on your trading style, your habits, which one is more effective to you as a trader. Okay, so it depends on you. I would trade the news actively, not with pending orders. Because in the past, at least, what I have witnessed that, especially during extreme volume on the market, if the price asset is extremely volatile and you set a pending order, it still takes just a little bit of time to enter the trade, right? You cannot expect your trade with a pending order to be initiated exactly at the same point where you set that pending order, because the price is extremely volatile. It might, within a microsecond, it might jump to a completely different price level and you get a completely worse entry price than you actually expected. So you kind of get into a really severe disappointment if your trade was not exactly initiated at that same very point. Okay, so I feel that manually you would have a bit more control over the slippage. So that would be my preference. Okay, we are past the 1 hour mark. Last call for questions if there are anyone's coming in. Okay, it seems that there are no further questions coming in. So from my side, thank you very much for joining today's webinar. It has been my pleasure to be the host. And as always, trade as safely as possible and enjoy the rest of your day. See you next time. Take care.